Welcome to Illuminati Silver. We tell the truth about silver. Today is Monday the 16th of December 2019. And yesterday we produced a video entitled, Will US equities sell off in favour of UK stocks instead of gold and silver? And on Saturday we published our gold and silver weekly update for the week ending the 13th of December. Now links to both of these we've placed in the description box below. Now, in both these videos, we highlighted that equity markets, and especially the UK stock market, can be expected to rise, and in terms of the FTSE 100 index, rise considerably. We also pointed out in the weekly update that we should expect gold and silver to rise this morning, not dramatically, but slightly, but this rise would eventually be tempered by funds flowing back again into equities. Or at least, that would be a high probability. Now, it's only the start of the week, but we were comforted in that our analysis has appeared at least to be correct so far and endorsed by both Bloomberg and Reuters. So let's take a brief look at what they have published this morning. Bloomberg.com Markets. Bank of America says market primed for melt-up in quarter one, by Gregory Stewart Hunter, December 16th, 2019. Financial markets are set for a risk asset melt-up in the first quarter of the new decade, according to Bank of America Corp. As Brexit and trade war risks recede, and with the Federal Reserve and European Central Bank still adding liquidity, the outlook for the beginning of 2020 is bullish. Strategists, including Michael Hartnett, wrote in a December the 12th note to clients, quote, "We continue to expect returns to be front-loaded in 2020, the strategists said. Positioning is turning bullish, and December's Global Fund Manager Survey on Tuesday should confirm the positive sentiment," they added. The strategists expect the S&P 500 to reach 3,333 by March the 3rd, a rise of 5.2% from Friday's close, and see the 10-year Treasury yield hitting 2.2% by February 2nd, an increase of 36 basis points. Global stocks climbed to record highs Friday after the United States and China agreed to a Phase 1 trade deal, and the UK Conservative Party won a parliamentary majority, clearing the path for the country's exit from the European Union. While equities in Asia were mixed on Monday, they climbed in Europe alongside futures on US stock indexes as investors awaited further detail on the trade front. Quote, "Some of these geopolitical risks seem like they are somewhat resolved, but they're only on hiatus," unquote. Seema Shah, chief strategist at Principal Global Investors in London, said in an interview on Friday. While a rally should ensue in the short term, she said investors should take a defensive stance in their asset allocation. The benchmark MSCI Asia Pacific fell 0.1%, receiving support from better-than-expected activity data from China. Later in the session, the Stoxx Europe 600 index rose as much as 1.1% to reach an intraday record high, ahead of an unexpected decline in German manufacturing data. Many investors are agnostic about the next move for the market. Daniel Tenengautzer, head of market strategy at BNY Mellon, wrote in a research note citing client feedback. Quote, "Following conference calls with investors in Asia, EMEA and the Americas, as well as meeting with investors in the United States and Canada, we conclude that investors are uninterested in adopting a strong bias in any direction," quote, he said. If we take a brief look at Reuters today, December 16th, and we type in equities, just to get an overall feel of the headlines, this is more or less what we come across. Global stocks rise as investors cheer preliminary US-China trade deal. Daily briefing, markets nearing record highs as year ends. UK stocks may move from Brexit fear to fear of missing out. Interesting though, Southeast Asia stocks most drop as investors seek clarity on sign a US interim deal. So generally, with that one caveat, we have essentially markets being very positive, or certainly the headlines are supporting markets. And if we take a quick look at Bloomberg, we discussed in our video yesterday about the American markets being up, and as you can see, the Dow Jones is now well back over 28,000, the S&P well over 3,000, and the Nasdaq now at 8,700. But this morning and overnight, we can see the Euro Stocks Index is up 24 points, is up over over 0.6%. The FTSE 100 Index, as we predicted yesterday, up nearly 2%. The DAX, the German index, up 0.51. The CAC index up 0.8. And the IBEX up 0.7. Asia Pacific, as mentioned by Reuters, not so good. Nikkei down 70 points, so it's down 0.3. The Topix index from Tokyo down nearly 0.2, not quite. Hang Seng index down 0.65%, but that had performed extraordinarily well last week. The CSI up half, S&P ASX 200 up 1.6, and the MSCI Asia Pacific up 1.59. So Asian Pacific a little more skeptical about the US-China trade deal. Part of the reason for that is that the US seems to be talking up the deal, whereas certain Chinese officials have hinted at some degree of skepticism. But that's politics, hey ho. But again, as mentioned in yesterday's video, European and particularly United Kingdom markets are on a tear, especially after Boris Johnson's victory and, of course, the US-China trade deal having been signed on Friday. Now, the figures do appear to speak for themselves, and gold at the time of writing and dictating this podcast is up just over $1.60, and silver is doing well, up 11 cents at $17.05. Equities, as already mentioned, are doing well too, though there are some signs that the Chinese are less bullish about the proposed Phase 1 trade deal than the United States appears to be. And we should watch out for cracks in this relationship, as any reversal will of course hit equities and be considerably bullish for gold, followed by silver. And of course we await the opening of the American markets later today. Now, the second purpose of this podcast is also to point out that, as we've mentioned on a number of occasions, there is a sort of schizophrenia about silver investing and pricing. As silver is demanded for both industrial purposes as well as monetary purposes, these two are often at odds with one another, usually. Not always, but usually. When one is up, the other is down. If the figures about the US economy and China and the European and UK economies are true, in that they are much lower than previously, but perhaps not quite as bad as the markets originally thought or anticipate them to be, then we can foresee a rise in the demand for silver for industrial purposes, at least compared to expectations, not necessarily a physical rise compared to last year. And we have to consider this when assessing its price against any drop in demand for it as a safe haven bet, or even as a speculative bet in the paper markets. Now, with silver moving over $17 this morning, the next few days are important for this precious metal, as $17 is either going to act as resistance or support, more psychological than actually technical. Now, tomorrow we shall publish where we believe gold and silver prices are actually heading towards the end of this month, and compare it with our forecast earlier this year. Now, meanwhile, do share your comments, because they are read, if not always quite answered to promptly. They are read, and not just by us, but by other subscribers. And before I go, I wish to thank all those who sent condolences for the recent demise of my brother, who died of a heart attack on Friday, less than 2 months after the demise of my father. It's a difficult time for the family, but we have no intentions of letting our subscribers and supporters down. So we'll continue with these videos as often as we possibly can in the short term. Thank you so much for listening, and if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.